Hey guys, this is Chris Mincola with the Mincola Group over at West USA Realty, and I'm going to be doing our weekly housing market update as we normally do. So please send in any questions you have. Make sure you like, follow, and subscribe to our channel on Facebook, Instagram, and YouTube, and also on Rumble. And make sure you're getting this great information every week. It's not great because I'm doing it. It's just great because it's good for you to know what's going on in the housing market. It's one of the biggest ways people create wealth in America. So it's good to keep up on that since it's usually the biggest purchase most people are going to make in their lifetime or purchases that they'll make in their lifetime. And let's go ahead and jump right in. Some quick stats for you. This is going to sound a little crazy, but first thing is 40 days closed on market. That's where we're at right now as far as our average close days on market. That's up considerably from where we were just a few weeks and months ago. So 40 days closed on market. So don't be surprised if when you list your house, it may be sitting for at least 2, 3, even up to 4 weeks before it goes under contract. But make sure you're pricing your home appropriately. The appraised values are not, I repeat, the appraised values are not going down, but certainly the overall average list price, the overall, as far as new listings, which we're going to take a look at here real quick, and also what homes are actually being able to sell for now compared to where they were prior to, like, before March, April, May, is considerably different. People, again, and I say this over and over again, we always take, a certain square footage range, and then we look at square city block, and we go into like properties, 1 story to 1 stories, on subject property of comparable sales around the area, and then we look at the average comparable sales in the area. And what was happening before was people were pricing their homes when we were in the insanity market, when there was like zero inventory, which is not the case now. And then we're pricing them at the high end of the comps, and even sometimes adding on to that by 20 to 50,000 and getting it, or they were getting offers. I hear even like lots, brand new build lots were going for, I heard, up to 80, $90,000 sometimes, that we saw in transactions with certain builders just for the lot, competing for a lot at a new build. So it was just insanity before, but now our supply is up. And this is going to sound insane. Last week we were at just under 4 months supply. Last week, that means if everything were to sell, it would take about 4 weeks if there was no new inventory. This week we are at, get this, and this is going to sound insane, but 7.41 months supply. The reason for that is, it's kind of an anomaly. We're going to probably see that, by next week, kind of drop to about 4 months supply again, which would be about normal. And that's a balanced market, about 4 months supply. 4 to 6 months supply is kind of normal for us here in the Phoenix area. And again, everything we're talking about is usually going to be hyper local for Phoenix. But that number really shows us what's going on, because we had a very low number come in for new listings. We actually only took in 1752, which we need to have at least 2,500 or so, or more, to kind of keep where we're at at a certain level. And also we only had closed units. Our closed units were actually down over 36%. We only had 1187. So when you kind of combine all the numbers and then you look at what actually went under contract, that actually went up 5.6%, with 3783, which we'd like to see that number be a little bit higher. But in any case, that puts us where we're at right now. And again, just an anomaly. We're not normally going to be at that number. It's just kind of a week that was, the multiple listing service basically giving us very low numbers of what sold, and they're just going by those numbers. But that's what we were for the week. Okay, so we'll see what changes there. We'll keep an eye on that for you. The other big thing I would mention just in passing is our new listings were down 27.7%. So we're starting to see a leveling off there, with the big influx of supply of homes that we started getting around March and April, and then it's kind of continued on to now. that's obviously, we had an increase in supply and an increase in interest rates and already high prices in homes. We saw that our demand dropped off considerably, which we'll talk more about. And in that, now we're at 51.51% of the homes in the MLS are actually below the $500,000 mark. So that means that it's bringing down the overall average of what homes are selling for, since that's the biggest bulk there of what we're looking at in home prices and what's being listed for sale. But suffice to say, that could be a trend that we're going to see. And if that does change, as long as interest rates don't go up anymore or much higher, which have kind of leveled off, they actually went down and went back up a little bit overall. But if we see that is the case, and we start seeing our supply drop, possibly, never know. We'll have to wait and see. But if we see that supply drop again, we could see some changing in the way the market trends again. But right now it's kind of a leveling out, a balancing out into more of a normal market for where we want to be. We're nowhere near where we want to be, in those numbers for supply and demand. But at any rate, I'll give you the details on that in just a second. Absorption rate is 13.50. That's again a pretty slow rate, and our average list price right now is 659 and some I'm sorry, 693 and some change, and 565,000 is the average sales price. Our list to sales price ratio is at 97.48. Now this is a really good indicator. Usually we want to kind of be right around the 98 mark, 98.8. So what this tells us is, again, we're seeing that that's a little bit below normal. And what we're kind of seeing in this market shift in numbers and kind of leveling off is also the fact that a lot of people who listed their homes maybe a couple months back, 2 to 3 months ago, and they're maybe expiring or taking their homes back off the market. They just kind of been sitting there because they wanted those higher crazy end prices. They haven't been willing to maybe drop the price to reality of where the actual appraised values are. They wanted the crazy market prices, or weren't willing to do maybe some updates on the homes that needed to be done in order to get the higher end of the prices. We're seeing that a lot of those people are kind of dropping off also. But a lot of the new listings, which we're going to talk about, are actually selling fairly quickly once they come on the market. And they're coming, like for instance, 102 of the sales that happened just this past week were, just in the past week, and that low number of home sales that we talked about earlier on were actually new listings. So people are starting to come on the market, price accordingly, and they're actually selling their properties with fresh listings at fresh prices, right? So keep that in mind. You're getting ready to list your price, make sure you kind of go over the details of that and be, in reality of where things are, and understand people are getting hit with inflation. People are getting hit with higher interest rates than we had, basically double where they were last year, and just even a few months ago. So it's really important to keep that in mind, along with what we had, basically a overall tripling in inventory. So some people are wondering what's going to happen, with the market in Phoenix area. Keep in mind a lot of the stuff, and again, I know people, are getting hit with inflation, interest rates, and all that, but it's actually a really good time to buy, from the sense that the market has kind of cooled and balanced out. So we're in more of a balance or even buyer market, depending on the area, region, and subdivision, city that we're talking about, which I'll get into more in a minute. But these are really good indicators that we can get some really good deals as a buyer. Okay, there's also some really great programs out there. People are getting closing costs. There are some amazing incentives that builders are giving for to buy down rates, so you can actually almost end up where we were a year ago. We're pretty close as far as your payment goes, with some of the closing costs, in order to buy down the rate. It's a big deal. It really is. And of course, you want to make sure you're with a good, mortgage wholesale broker. I'd recommend anyway, a mortgage broker, wholesale broker that can kind of broker out to get you the best deal possible on your rates and terms. So in any event, some of the details for Arizona economic statistics for July 2022, Arizona ranks #1 for economic performance overall in the nation. Best forecast in the nation for the next 5 years in population. We're #4 in the population boom, currently waning. However, forecast is for continued growth. And 2022 median age is 38.6. Our 2021 growth was 109,000. 2022 is expected to be 116.3, and 2023 forecast is 121.9. So you can see that our population growth is really going to be keeping up. And why is that? Well, job growth, right? People go where the jobs are. People go where maybe there's a little bit warmer weather. People go where they can, maybe open up a business a little bit earlier, or easier, without, some of the mandates maybe still lurking out there, without the higher taxes and regulations for their businesses. So wage increases. We're tops nation at 6.4%. However, not keeping up with inflation. Because inflation, of course, about 9.1 went down to 8.7. If you're taking into consideration the real numbers, the way they used to compute it, it'd be even higher. Basically, people are paying about 25-30%, give or take a little bit, on where we're at in the week of the month, for everything, when you take into consideration your gas, your food, and your utilities, right? So about 25-30% more, and all that. And then you throw in the interest rates on top of that. But, Phoenix is not over that mark, but we are, we top the nation at 6.4 with wage increases. Job growth 4.2%, middle state of the union. Unemployment is at 3.3%, an all-time low. And we got a lot of tech jobs coming here. We talked about the semiconductors, Taiwanese semiconductors in the North Phoenix area, up by New River, and up by the just northern part of Phoenix. The last few weeks we've been talking about that. So bankruptcy filings year to date are down 15.6%. Phoenix Metro is down 15.6, and Tucson is down 9.4. And the real estate market is the best it's ever been. Let's see, rise in housing prices is 11.7% higher than average earners, and I'm sorry, then let's see, 11.7% higher than average, okay, than we see around the country. And our increases in housing prices have been about 11.7% this year so far. Renters, we see rising 6.3% year over year. Okay, so those are kind of some of those stats. I wanted to kind of move on here to what we were talking about earlier with the mortgage rates. We had a quick jump, and mortgage rates were kind of climbing, and they went down below 5% on average, the average rates, and then they kind of leveled off back around 5. So that's where we are on that at this time. Every week we give you what's called the CMI, or Cromford Market Index, and that Cromford Market Index basically gives you a range of 90 to 110. In that range of 90 to 110, you're in a balanced market in their index. If you're over 110, you're in a seller's market. If you're under 90, you are in a buyer's market. So sorry about that, allergies. The overall index right now is technically in a seller's market, but we are at 112.5. So basically, kind of like right there near that whole balanced market across the board, if you look at every city and kind of average everything out. Your demand right now is at 79.5. So again, that means we are under demand right now by about 20%, or just over 20%. And then and again, a lot of that has to do with the factors of inflation, interest rates, and so on, and the rise in housing prices. And then, but keep in mind, we've also got a lot of clickbait out there about, the housing market's going to crash. Da, 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 da. Keep in mind, once again, housing market crash of 2008. That's what caused the recession. 2008 housing market crash caused the recession. Why? Due to poor lending practices, and people didn't have as much equity then. There was also in the Phoenix area like 56,000 homes on the market. Okay. So the supply was much more, totally different market than where we are now. Plus, people have a lot more equity. Okay. So keep that in mind. In every recession outside of that, except for one other one, we were dipped a hair. We basically have equity gains in every housing market. I just talked about how strong our economy is here. And then for our area in Phoenix, if we were in a totally balanced market over the next year, in a normal market, we're still going to increase by about 5, maybe 6%, in a normal housing market, in a balanced market in the Phoenix area, Phoenix metropolitan area. So keep that in mind. Which is good. That's very good. The national average is more like 3-4%. So that's why a lot of people like to invest in property here in the Phoenix area, along with the other economic factors we've already talked about. So our supply right now is at 70.7. That used to be all the way down to like 20. So we're down like, to a half month supply in homes. So that means we're still, under that totally balanced range of 100 by about 30, or 29.3. So that's kind of where we are on the Crawford Market Index. And again, we're seeing this leveling off in the actual rate of this drop happening, because in the CMI and the index, overall index, we're at 112 right now and some change. We were like up near 500 just a few months ago, just a few weeks and months ago. So all this kind of changed again, like around March 11th. And April, May, we just saw huge dives in the CMI. Why? Because we had interest rates rising, and we had a huge influx of inventory. People trying to sell off their homes because the rates were going up, fear of missing out, and then they just wanted again, the exorbitant prices that they were getting back then versus what really the appraised values were for the properties. Again, it's not that the properties are, we're in a nosedive or anything crazy like that. It's just not the case, even though the clickbait out there from a lot of the different news organizations are saying that. It's not to say that people aren't having economic issues because of, inflation. We definitely see that with the way the recession hit two negative GDP quarters, but that doesn't mean that, again, sky's falling chicken little. It does mean that there's a lot of clickbait out there. Okay. So that's a fact. And that's where we are right now in Phoenix. Now, when we look at the changes in this, again, we last week, month over month, we're 31%. And I've kind of been mentioning this the last 2 or 3 weeks. We've seen this leveling off in the minus change in the CMI and Crawford Market Index. Last week was minus 31%. This week it's minus 29%. So we're kind of seeing a slowing and a leveling off when we look at the charts, and it's kind of like, whoa, okay, yeah, it's still going down, but it's not quite going down as fast as it was in some of the nosedive periods that we were seeing before. And then in the last week, we saw it come down 5.7% in the last week. So right now, cities that are in definitely a buyer's market right now on the index would be Surprise, Tempe, Gilbert, Buckeye, Queen Creek, and Maricopa City. And then a balanced market would be Chandler, Peoria, Glendale, Phoenix, Mesa, and Avondale. And when we look at cities that are still in that or over the 110 mark in a seller's market, technically would be Goodyear at 112, which is barely over that 110 mark. Cave Creek at 131, Scottsdale at 134, Paradise Valley at 180, and Fountain Hills at 204.2. Okay, so even though they've all been going down, those are kind of the quote unquote seller market areas or strongest markets for sellers. But we're still seeing that they're all coming down, but leveling off. So new listings in the last 4 weeks, we've had 10,747. And this is obviously way up, and this is what has been a big part of what's been driving the market is the supply with new listings. Okay. But that is actually starting to level off a little bit itself. So, and we're seeing that those were actually you know, not only leveling off, but they were, started to level off actually a couple weeks back. So right now we're down 5% from the same week in August of 2021, as far as our inventory is concerned. And active listings right now are coming on the market at 500 a week versus 1,000 a week. Okay. Then so we're kind of seeing a slowing in the inventory, in other words, but because we had such a low closing in the market and a high under contract, we had those large numbers that we were talking about earlier with the actual supply. So anyway, hope that makes sense. Valley buyers, this is just an article taken here from the Phoenix Business Journal. Valley home builders see surge in home buyers backing out of contract because why? Well, think about it. Before there was no inventory, so people were going into, getting bidded out, and they were going for new homes. A lot of people like to buy a new home anyway in general, but they were buying new homes because they kept getting beat out on resale homes a lot of times. That was a big reason why we saw a surge in demand for new homes too, and we saw that builders are trying to keep up, and they were building more spec homes or homes under contract, and just kind of building and not waiting for people to come in and say, yes, I want to build this way. That they were already just building homes and ordering all the supplies for that home, and it was already specced out. So now we're seeing, because of this surge in supply and the higher interest rate, we're seeing, well, people are like, well, wait a minute, there's a lot more choices out there now in the resale market. And they're seeing, well, maybe, since new homes are always usually, going to be more expensive than the resale in the same area for the same size home and all that. Maybe I can get a bigger yard, and I can get a home that's already landscaped in the backyard, and I can even get one with a nice pool. And maybe it's not that old, but it's a resale or it's been updated. So we're seeing a huge surge in people backing out of buying new homes because they'll be able to maybe get a home for $50,000 to even $150,000 under what a new home will go for in some cases. So we had a lot of cancellations. They saw a cancellation rate in July was 30%, up from 8 to 10% in 2020 and 2021. And that was up from 15% in 2018 and 2019. So a huge increase in people backing out of these new homes. So something to be aware of. And now we're seeing that, new home builders are actually giving a lot of incentives because of this, again, with those closing costs to buy down the rate or to use to pay for title costs and things like that. So it's just something to make sure that you're keeping in the back of your mind if you're thinking about, going out there and buying a new home. You might be able to get a really good deal on a resale too, but we can help you with either one and kind of see what the differences may be. So anyways, guys, that is all I have for right now. I am going to be doing some more on the rental market probably in the next day or two, and get you some more information on that. But I'm going to end this video at this point. If you guys have any questions at all, please make sure you reach out to us at McCulloughHomes.com, McCulloughGroup.com. Call or text us at 480-788-8569. Or you can always email us at home@McCulloughGroup.com. Again, make sure you like, follow, subscribe, and share this with your friends. Check us out on Facebook, Instagram, YouTube, and Rumble, and we'll see you guys next time. Thanks a lot.